Hey, hello investors and future investors. Welcome to the channel. For today's video, we're going to be going over LEAPS option strategy for small accounts. In today's video, I'm going to show you what kind of stocks you need to use for LEAPS option. I'm going to show you how and when to pick up these LEAPS options. And once you've mastered those two criteria, I'm then going to show you how to use these LEAPS in your portfolio in order to magnify your portfolio. So if you're new to options trading or you're trying to get into options in order to make that little extra income, then you definitely stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be going over the LEAPS option strategy and how this can be used even if you're trading with a small account portfolio. Now, LEAPS option stands for long-term equity anticipation securities. And you guys know the best way, the only way to learn options is to practice, practice, practice. That being said, let's go ahead and get down and dirty with options. For today's video, we're going to be using one of my favorite stocks, which is going to be Sweet Green, ticker SG. So we're going to go ahead and we're going to start by opening up the option chain, and that can be found down to the bottom right. We're going to go ahead and we're going to click that, and then the option chain open. Real quickly, if you're not familiar with the option chain, that's going to be represented by this area down here. Now, what this area down here does is that it gives us enough information in order for us to make a very informed decision before entering any option contracts. Now, in order to get into a LEAPS option strategy, LEAPS option strategy is buying a far out call with the intention of the stock appreciating in value over time. Now, despite what anyone has told you, the best strategy for the stock market is what's known as a buy and hold strategy. Now, LEAPS options come pretty darn close. With LEAPS option, you're able to buy a far out expiration date on any stock and hold until the stock appreciates. And you guys know how the stock market does. The stock market continually goes up. There are some pullbacks every now and again, but the overall trajectory, the stock market goes up. That being said, we're going to go ahead to buy, we're going to go ahead to call, and we're going to go ahead and choose our strike date. Now, a LEAPS option could be any date from 1 year or further out. Now, it also depends on the use you have of the LEAPS option. Depending on the use, you could even choose a closer expiration date. But for the purposes of this video, we're going to go with the far out expiration date. Now, this is February, so we're going to go out to let's go with the January 15, 2027. Now, I know a few of you do not know what you're going to be doing next year or what you're going to be doing next month. But with the stock market, you stay in the stock market and you make lots of gains if you're able to make short-term gains using long-term strategies. So 2027 is nothing in order for you to choose your strike date. Now, before we go ahead, I'm going to explain this strategy to you. I need you guys to do yourself two favors. Favor number one, always make sure you do your own due diligence before investing. Favor number two, always make sure to have an exit strategy before entering any options contract. So let's go ahead. Now that we have buy and we have call and we have our forward expiration date more than a year, which represents a LEAPS option, now we're going to proceed to choose our strike price. Now, the current share price is at $20.52. So if you were to buy 100 shares of this stock, it's going to cost you $2,052. Now, the reason why you were to go buy 100 shares is that whenever you're trading options, it's always multiples of 100 shares. So for this example, I'm going to be going with the $15 strike price right here. Now, with the $15 strike price right here, we're going to have a break even of $27.95. Please remember that. And then we also have a delta of 0.84. Also, remember that. These figures are going to be very important when picking up your LEAPS. Now, because the LEAPS option is a buy strategy, we're going to have to pay some kind of money to acquire it. The money we're going to be paying is going to be $15.30. Now, $15.30 in the real world is going to work out to $1,530. Each option contract, once again, is multiplied by 100 shares. So, as you can see here, The Robinhood name is a long call, but we all know it's a LEAPS option. Now, in order for you to pick up a LEAPS option, always try to get into stocks that are pretty stable, not too volatile. And also remember, you need to make money off of these LEAPS options. So make sure that it's not too slow either. Let me show you what I mean. Let's go ahead and click in right here. And this is going to open up a secondary amount of information in the option chain known as the Greeks. So as you can see here, this implied volatility is perfect for trading options. I never said it's perfect. I said it's perfect for trading options. The reason for that is that it's not below 50. Below 50 tells you the option premium is not going to be too lucrative. An implied volatility of above 100% tells you the stock is entering into very risky territory. But any implied volatility between 50% and 100% should be fairly medium risk when entering into a LEAPS option. Now, the delta. The delta down here is 0.84. How does the delta help with your LEAPS option? Well, the delta tells you the movement of the overall option over a period of time, depending on any change in the stock price of $1 in any direction, either up or down. Let me stop talking option terminology and let me talk normal. So basically what it means, if this share price goes up by $1 to $21.55, then this overall contract is going to go up by your delta, which is going to be $84. Once again, although your delta is 0.84, each option contract is multiples of 100 shares, so that's going to give you $84. Now, with this reward also comes risk. So vice versa, if the share price does fall by $1 to $19.55, then this overall option here is going to be reduced by $84. So it works both ways. But like I said, the reason why LEAPS option is one of the favorite option strategies I employ in my portfolio is because the overall trajectory of the stock market is always upwards. So that right there is going to be the kind of stocks you want to use in order to do your LEAPS option. Now I'm going to show you when to pick up a LEAPS option. And for that, let's get out of Robinhood. We're going to go to stockcharts.com. Now, as you can see here, we have Sweet Green ink right here. Now, what I want to bring to your attention is this right here that says MA200, right where I'm circling the cursor right here. Now, the MA200 tells you the price that the stock is actually trading at over the last 200 days or 6 months. And that is depicted by 32.59. Currently, the stock that we just saw was trading around $20. Now, if you go below right here, this area here is known as the RSI or the Relative Strength Index, which is what's known as a momentum indicator. You can see RSI right here to the left. Now, how does the RSI help? RSI measures 0 to the bottom to 100 to the top. But what most of us traders and investors focus on is the $30 mark and the $70 mark, which means that any stock that trades below or around the $30 mark, it tells you that that stock has been oversold. Vice versa, any stock trading around the $70 mark right here and above tells you that that stock has been overbought. So I brought this to your attention in order to demonstrate when is the best time to pick up a LEAPS option. So when the market goes down to a 30 RSI, that is like brilliant territory here. However, no one can say for sure if the market is going to reverse and go upwards. So whenever you decide to pick up a LEAPS option, always make sure you see a clear indication right here that the stock is going back in an upward trend. This is one right here. As you can see here, this is another one right here. Now, any point along this line is a good position in order for you to get into a LEAPS option. There's another one right here. Now, the RSI alone does not give you enough information whether you should get into a particular stock or not. It's just one of those indicators that's quite useful. Now, let's go ahead and go back to Robinhood. Now that you have a LEAPS option in your portfolio, what are you going to do with it? Well, there's several things you could do with it, and I will tell you what I do with my portfolio. So, now that you have the LEAPS option in your portfolio, one of the best strategies to do with it is do nothing. Yes, you heard me right, do nothing. Remember, the LEAPS option is more of a buy and hold strategy, where you wait out about a year or further in order for the stock to appreciate in value. When the stock appreciates in value, then that's where you make the majority of your money. And let me show you an example. So currently the stock is at $20. Now, if the stock goes up to, let's say, $33, and I'm going to show you the $33 strike price even more as we go along in this video, then the difference between the $33 and the $20 is going to be $13. Now, $13 is a lot of money. Let me show you how. Remember, we said each option contract is multiplied by 100 shares. So you're going to multiply your $13 by 100, and that's going to give you a capital appreciation of $1,300. Now, do not forget the delta. Remember, we had a delta of 0.84. So that $1,300 of capital appreciation that you receive, you're now going to multiply that by 84%, which represents your delta. And that is going to be your true gain for this option strategy for just buying it and doing absolutely nothing. So that's one way you could use a LEAPS option in order to grow your portfolio. Now, the reason why the LEAPS option is perfect for trading with small accounts is because the cost of entry is extremely low. Like I mentioned a bit earlier, if you were to acquire 100 shares of Sweet Green right now, you would have to pay $20.8 per share, which is going to work out to $2,080. By acquiring a LEAPS option, you're now only paying around $1,500 to control 100 shares. Now, please mark my words carefully. If you were to buy 100 shares, you're going to be able to use 100 shares and own 100 shares. By using a LEAPS option, you're able to control 100 shares. There is a difference. The other strategy you could use if you have a LEAPS option in your portfolio is what's known as selling covered calls. Now, the covered call option strategy is a brilliant option strategy in order for you to grow your portfolio by making consistent income while you wait for your LEAPS option to appreciate in value. So let's go right now. We're going to choose a date of March 21st, which gives us 23 days to expiration. And that is depicted here by 23D. Now, unfortunately, this stock only does monthly options, but I will show you a stock that I do have in my portfolio and I do have LEAPS on that you could trade weekly, bi-weekly, or even monthly. So we're going to be going with the March 21st. And then remember, I told you we're going to be using the $33 strike price. So let's go ahead and go up to the $33 strike price right here. And if we were to use the $33 strike price, we're going to be receiving a price of 0.35. Now, the price of 0.35 is going to be worked out to $35. Now, I know that looks like a little bit of money, but remember, the ultimate goal is to keep the LEAPS in your portfolio in order for you to make consistent income as the stock appreciates. The money you make doing monthly covered calls is just additional money that you paid for actually holding the stock. So why not go with small money like $35 every single month? Remember, you're making money two ways. Do not be greedy, or else this strategy is not going to work for you. Now, the other thing you could use this strategy for, this $35 you make a month, you could probably use that money now to actually go and buy shares, actual shares, instead of a LEAPS option. So why a LEAPS option is appreciating value, you're now going to be accumulating individual shares to grow your portfolio. So your portfolio is going to be growing now in three ways. One, from stock appreciation for the LEAPS option. Two, from making monthly income. And three, from buying actual individual shares, which also is going to appreciate in value. Okay, so now let's not forget your break even. Hopefully you guys remember what your break even was. And if you don't, the break even I showed you is $27.95 or $28. Your break even is going to be right here. So what Robinhood is actually telling you is that if you decide to use your LEAPS option in order to sell consistent covered calls, then the $28 strike price should be the minimum strike price that you're going to use in order to sell covered calls, because that's what is your break even is higher than your $27.95. So all the guesswork is out. The reason why I personally choose the $23 strike price is because I'm a ultra conservative investor and I prefer to get the small money in the short term while I get the huge gains over the long term. I'm more of an investor than I am a trader. Now, I did promise you guys I'm going to show you a nice stock that you could use in order to do weekly covered calls, and that's going to be Micron Technology. Okay, so here we are on Micron Technologies, and I'm not going to go into detail with this. All you do, you go out, choose whatever expiration date you want. Let's use March 7th, just an example. And then you're going to go ahead and choose your strike prices. Now I'm going to go ahead and choose the strike price of 104, and that's going to give me $140 every 2 weeks. Remember, you could either go high and make a lot of money in the short term and compromise your long term strategy, which is the LEAPS option, or you could go even higher and get a little bit amount of money, but you securing your LEAPS option in your portfolio. Remember, only you can decide which one of these work for you. Now, the LEAPS option strategy is a perfect option strategy to use in order to grow a small accounts portfolio. When you're doing LEAPS option strategy, always make sure you choose good stocks that does not have too much high risk or high volatility. Once you have identified those stocks, you're going to go use a simple indicator like an RSI in order for you to determine when is the best time in order for you to get into the stock. Once you get into the stock now, there's a couple of things you can do to grow your portfolio. One is do nothing. You wait until the stock appreciates, and that's how you make some money. The next thing you could do is go ahead and sell consistent covered calls in order to make money while you hold your LEAPS option for the stock appreciation value. And the third thing that can be done is that when you make consistent income selling covered calls, that income can now be used to go ahead and buy individual shares, which is going to boost your portfolio even more. Now, just like any option strategy, it is not a get rich quick scheme. This is going to take a while, so have patience. Now, if you guys found any value in the video, go ahead and like the video, subscribe to the channel. Most importantly, if there's anyone out there struggling to grow a small account portfolio, feel free to share the video with them. Let's go ahead and help as many as we can. Now, until the next video, pushing your investments.